They don't make headlines or stand on podiums promising change. Yet, for more than a century, one firm has threaded itself into the architecture of global finance, survived every financial crash in the last 150 years, and placed its own people in the halls of governments. And in doing so, they've shaped policy, markets, and crises on a scale most people never see. Some call it a regular bank, others see it as the most powerful company on earth. This is the story of how Goldman Sachs has made an impact that, from the outside, looks almost structural. Goldman started as a small commercial paper business in 1869. But what made it different from thousands of other similar businesses? What made it a global powerhouse in the coming decades? The answer is the unique talent for picking the right partners. And it all started in the late 1800s when Goldman Sachs joined forces with Lehman Brothers. This alliance gave Goldman something far more valuable than profit: credibility and a permanent place in Wall Street's inner circle. It also planted Goldman firmly inside the club of bankers who decided which companies would live or die in the capital markets. Then came 1906, a turning point. Goldman Sachs pioneered the practice of taking companies public through initial public offerings. And their big debut was none other than Sears, Roebuck & Co., the Amazon of its day. That deal announced Goldman Sachs as the firm that could connect America's rising corporations with the capital they needed to dominate. Goldman helped Ford Motor Company raise funds to expand production of the Model T. That's right, the car that defined the 20th century was financed with Goldman's help. Today, it's an organization that sits at the intersection of money, information, and policy. And all this translates into one thing: influence. One of the clearest signals of this influence is Goldman's access to government corridors. Henry Hank Paulson left Goldman as CEO and became U.S. Treasury Secretary in 2006, putting a former Wall Street CEO in charge of economic policy at the moment Lehman was collapsing. In other administrations, former partners from the firm have held senior economic posts, from national economic advisors to treasury roles. These influential figures include Steven Mnuchin, Gary Cohn, and Dina Powell. And this is not always limited to people moving from Goldman to key government positions. Recently, the former UK Prime Minister, Rishi Sunak, became an advisor with Goldman Sachs. Similarly, Robert K. Steele became vice chair of Goldman Sachs after serving as undersecretary at the U.S. Treasury from 2006 to 2008. Every time a Goldman partner takes a government seat or a policymaker lands a Goldman job, the firm tightens its grip on the levers of power. There's a reason why many media outlets call the firm Government Sachs in their stories. Those channels proved decisive in 2008. As the mortgage market imploded, Goldman converted into a bank holding company in September 2008 to secure access to Federal Reserve support and deposit insurance. As detailed in the famous story 8 Days, published in The New Yorker, the state protected Goldman by pumping capital into the firm while others sank. This action changed its regulatory profile and protected its balance sheet. Goldman accepted $10 billion in the Troubled Asset Relief Program, proof that in finance, size and connectedness buy protection. American International Group, the insurer whose collapse threatened the system, paid billions to its counterparties as part of the rescue process. Goldman was one of these counterparties, collecting large sums tied to positions that AIG had insured. Consequence? Taxpayers ended up covering Goldman's losses. Records and reporting from the post-crisis inquiry show that AIG paid nearly $13 billion to Goldman and other counterparties in the aftermath. Those episodes are just a small window into how these massive corporations work and control their interests. In Europe, Goldman played a role in one of the biggest financial scandals of the century, Greece's debt crisis. Long before headlines exploded, Goldman helped Greece mask the true size of its debt with complex financial engineering. Those moves allowed Greece to enter the Eurozone, but when the truth came out years later, the fallout nearly broke the European Union.
The realistic proposal from Greece will have to be matched by an equally realistic proposal on debt sustainability from the creditors.
Of course, Goldman's excessive reach has also led to tons of controversies and regulatory friction. After 2008, multiple inquiries scrutinized the firm's role in bundling and selling mortgage securities. Years later, the firm settled legal actions tied to its marketing and sales of residential mortgage-backed securities. There have also been many record-keeping lapses, misreporting, and system breakdowns that often resulted in heavy fines. The famous Malaysian 1MDB scandal that destabilized the government, Goldman Sachs played a dirty role for which it was later fined $3 billion. There are dozens more examples where Goldman kept paying fines due to irregularities, but no penalty has so far dented its global influence. To be clear, Goldman is powerful, but not omnipotent. It has competitors, it loses deals, and it faces pushback. However, the pattern over time is what makes the firm so notable. It has consistently been at the center of big deals, big rescues, and big policy conversations. When crisis or large policy shifts happen, Goldman is not just part of the response, but also the planning as reflected in the 2008 government rescue. Why would this worry a regular person? Because the decisions made inside Goldman Sachs' lavish office towers ripple into the lives of common people. It affects interest rates on our credit cards, the availability of mortgages, and even the value of our pension, like in the case of Greece where pensions were slashed. The point is, institutions like Goldman Sachs are powerful because markets, governments, and clients allow them to be. Goldman Sachs people occupy government offices, its balance sheet directly impacts global markets, and its trades and advice reach sovereigns and households. In the last 100 years, the firm evolved from a simple bank into a global advisor through its corporate advisory division and subsidiary, Global Institute. This allows them to not only influence key privatization decisions, but also steer governments in the direction they want. The question we have to ask then is not whether Goldman Sachs is powerful, that's obvious, but what a democratic society decides to do with that power. Do we accept the fact that Goldman Sachs secretly controls the world, or do we insist on rules that keep markets competitive, transparent, and accountable? So, what do you think? Do we really run the institutions, or do they run us? Let me know in the comments below.